Australia has a new government, but is it good news for the country's crypto sector? Welcome to the Daily Forkast May 26, 2022. I'm Megha Chaddah of Forkast, covering all things blockchain. Australia elected a new Labour government over the weekend, but what are crypto industry experts expecting from Prime Minister Anthony Albanese's administration? We'll take a look at that, plus a whole lot more coming up. Let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
Let's kick off with an update on the OG of crypto world, Bitcoin. Data from blockchain.com showed the Bitcoin mining hash rate dropped 10.6% yesterday on a 7-day average from its peak earlier this month. The Bitcoin mining difficulty level also fell by 4.33% yesterday after hitting a record high 2 weeks ago. The cryptocurrency's mining difficulty measures how hard a miner would have to work to verify transactions in the blockchain to dig out Bitcoins as rewards. Such mining difficulty adjustments are highly correlated to changes in the mining hash rate, which is the level of computing power used per second during mining. According to data from CoinGecko, Bitcoin's price has plunged by 26.6% over the last 30 days. It was at a little over $29,800 Thursday morning Asia time. With the Bitcoin price low, profit margins for miners are decreased, so there's less incentive to mine. You can find that story and lots more at Forkast.News. Over in Australia, last weekend's federal election saw a win for the Labour Party. So what might the change in government mean for the country's crypto sector? Forkast Lachlan Keller got the lowdown from industry experts.
Depending on who you talk to, the change in government could be either a good or bad thing for the crypto industry. On the downside, voters tossing out the Liberal Party means some of the sector's most vocal supporters, including Senators Andrew Bragg and Jane Hume, have been sidelined as progressive parties gained seats in the Senate at the Liberals' expense, while the former Treasurer Josh Frydenberg lost his seat altogether. While the Labor Party hasn't clarified its stance on the industry, according to the Sydney Morning Herald earlier this year, its financial services spokesman, Stephen Jones, said crypto would be considered as a part of a broad overhaul of digital payments legislation. Carolyn Bowler of the Australian crypto trading platform BTC Markets told Forkast that the Liberal Party had been leading the crypto charge, and she doesn't believe the Labor Party has gone as far in terms of policy development. Nevertheless, she thinks Australia cannot afford to fall behind, and that regardless of who is in power, regulatory issues around crypto will need to be tackled within the next parliamentary term. Despite its name, the Liberal Party is the more conservative of Australia's two major political parties, while the Labor Party is a more progressive, but still centre-right alternative. And Blake Cassidy of Bamboo, an Australian company offering micro-investments in crypto, believes the politics at the heart of crypto could appeal to the new government. He told Forkast that crypto is known for being built on an ethos around equal opportunity and accessibility, true principles the left promotes. The flip side of that, however, is that a more progressive economic philosophy by Labor could translate into a more conservative approach to regulation. Michael Bassin of commercial law firm Piper Alderman says the Labor government is expected to place a strong emphasis on consumer and investor protection in relation to cryptocurrencies. He also said the ongoing regulatory consultation already has these protections as a key element of a future framework. Last year, incoming Labor Treasurer Jim Chalmers criticised his predecessor's lack of action on that matter, saying the governments need to catch up and keep up with cryptocurrencies. For Forkast, I'm Lachlan Keller in Melbourne, Australia.
Today is the final day of discussions at the World Economic Forum in Davos, and our editor-in-chief Angie Lau has been there all week. She caught up with Marieke Flament, CEO of Near Foundation, to take the pulse of the crypto conversations happening there.
The first reflection is when you walk down the street, it's a lot of Web3, it's a lot of crypto companies. It's basically, you feel that that's what's happening. Yeah. And most of actually the spaces are very open. You don't need a badge to get in, you can get in. And then actually when you look at the rest of more the web and the traditional part, it's very guarded and you need a badge. And it's actually, you have guards at the entrance and you can't get in. And my reflection on that was actually, this is almost a reflection of the world we're in, right? You have a world that is open, that is interconnected, where people also from one crypto place to the other crypto place go and float around.
Yes, that's right. And share ideas.
And share ideas and communicate. Exactly. And that's what we see happening in the real world.
So, that's what we're also talking about, reflecting on, this discourse that's happening on the street level and really about decentralization and the promise of the technology. And if you take a look at the World Economic Forum programming itself, we have been seeing conversations about the metaverse. I think there's more important issues. And in your view, in our view, what do you think that is?
Well, I think we are at a time of absolute crisis wherever you go. And actually, I find it really difficult not to go into a loop of like, oh my God, what are we living through as humanity? But we are at a time where you have a war in Ukraine that is not stopping, that is getting every day worse and worse, and that's absolutely horrible. You have climate change that we're living, like we're seeing it. There is no way of saying that this is not happening. And you have basically just a world that is completely shifting. You have unsettlement and unrest and people challenging like the traditional organizations and what's happening. And I think in that, technology can play a huge role. And that's the real conversation, right? It's not having those two-sided worlds that are kind of trying to pretend to hear each other, but are not hearing each other. And so building technology with purpose, with intention, wanting for long term and for sustainability and to rebuild and create a better world, I think is absolutely fundamental. Yeah. And having this conversation and seeing the examples, you mentioned Ilya and the effort that's been leading for Ukraine, which is absolutely amazing. But we can, Ilya's put in 2 hours a full NGO to disperse funds in Ukraine, and millions have been raised in like a couple of days, and they were literally in the pockets of people and immediately. And so things like that, are not anymore like edge cases. This is really happening, and so we really need to lean on technology because we are facing some of the biggest challenges we've ever faced.
The bears seem to have a firm grip on crypto markets as investors pulled out over $140 million from funds under management in the week up to May 20th as per CoinShares. As Bitcoin and ETH, the biggest cryptocurrencies of the day, struggle to find their footing around the key psychological levels, what's next? Mark Lamb, Chief Executive Officer at CoinFlex, a leading crypto derivatives exchange and yield platform, joins in to talk about just that. Great to see you again, Mark.
Great to be here.
Now, the sentiment is quite negative at the moment, and we are increasingly hearing of a crypto winter. Overall, crypto markets have been reduced to just a third from the all-time highs of almost $3 trillion in terms of capitalization. Is there more pain to come?
Yeah, I think the biggest question is really actually not what's happening within crypto, but what's happening in the the external normal world. And so, the Fed is unfortunately the biggest determiner of crypto price and asset prices generally. Quantitative easing, free money has been going on for a long time. Interest rates have been very low. And you've seen this in growth stocks as well. Crypto's lost, maybe 2/3 of its value, gone from 3 trillion to 1 trillion. Well, a lot of growth tech companies have actually lost 90% of their value. I do think that there will be parts of the crypto industry that will be more resilient to these types of events. So we've seen exchange tokens do very well amidst this fall. And also Bitcoin and ETH have weathered the storm better than lots of project-specific tokens. But I think in general, project-specific tokens have gotten slammed. And so I think that divergence is really where you get a testing of who in the crypto space is committed to the long term and who is looking to cash out. You will see a difference in performance between the anonymous projects and the projects where there's a face to a name. And then also selling is driving further selling. So with the Luna scenario, the UST scenario, the collapse of those market caps drove more people in holding other coins to sell their coins as well. So all in all, I think there's going to be this event where basically for a long time, people will not want to deploy new dollars into crypto. How fast people deploy is important. And right now, no one's in a rush.
Well, the macro reading from across the world is also gloomy, with rising inflation, unemployment, people struggling to pay for daily necessities. What's the role for digital economy here? Are there certain digital assets which could outperform?
Yeah, I think stablecoins are going to grow in market cap in any market condition. This is this is why CoinFlex is so bullish on the stablecoin space, because regardless of what the market conditions are, people need dollars. And this is just a more efficient, more effective form of US dollar. And so I think stablecoins are going to outperform in market cap growth. Obviously, they don't really outperform in price growth. They're always worth one. So, and then projects linked to durability, I think will outperform. So anything where the owners of the coins, the founders, the team, the people involved in something are durable, they have staying power, they're going to be in the game for a long time, that's likely to stick around through a bear market and into the next bull cycle.
And digital assets under management are now at $38 billion US. That's the lowest since last July, with over 150 million taken out of Bitcoin in just the last week alone. What's your reading of the volatility and the flows we are seeing?
When you think about $40 billion, it's a drop in the bucket in the grand scheme of things compared to the trillions of dollars in crypto, 1 trillion now and 3 trillion at the peak. I think the hedge funds and the institutional flows actually probably don't matter as much as just individual holders who've decided, I need to be in cash now. Two main questions. Are they deciding this forever? I don't think so. Inflation is brutal. I don't think they're going to decide this forever. But the other question is, when they do get back in, which projects are they going to get into? Are they going to get just conservatively into Bitcoin and ETH and some of the biggest, most well-known names? Are they going to get into the DeFi tokens that were popular previously? Are they going to get into a new set of tokens that come out in the next cycle? Are they going to get into NFTs? Obviously, it's one which we can only imagine, we can only guess. But I think that will be one of the big factors for the next cycle.
Great conversation and insights as always, Mark. Thank you for joining in.
Thanks so much.
And finally, here's a sneak preview of the latest edition of Word on the Block, where we go beyond the headlines. This week, Piyush Gupta, CEO of DBS Group, takes a dive into how blockchain is transforming the world of banking. And what's the explanation behind the regulatory moves on crypto in Singapore?
When you think about, cryptos, it gets into the realm not of public money but private money. My own view is that private money is very hard to use as real money. The history of mankind has shown that private money generally tends to come cropper along the way. And therefore, for private money to serve those two purposes, medium of exchange, unit of account, tends to be quite difficult. I don't see that happening anytime soon. Even though Elon Musk said he'd accept payment for Teslas and this, he changed his mind a week later. The reason for that is you don't have stability in values and you don't have ubiquity and fractionalization of that money. So not easy to make that happen. However, I think private money or private cryptos as a store of value, I think they're here to stay. 6 months ago, there were $3 trillion of cryptos in the world. Now, that's $3 trillion store of value already. It's about $1 trillion today. It's obviously got sold off a lot. But nevertheless, as a quasi-replacement for gold or any other store of value, I do think they will be around. I don't think they're disappearing anytime soon.
The full episode airs tomorrow, so do check it out. And that's the Daily Forkast from our vantage point right here in Asia. For more, visit Forkast.News. I'm Forkast Megha Chaddah. Until next time.